All right, so 2022 saw heightened volatility in commodities with global uncertainties like the Russia-Ukraine war, rate hikes and surging inflation impacting commodities like never before. But as the year draws to a close, it is time that we look back and review the year for commodities. Now on ET Money Show, we will review how commodities fared this year and what we can expect in the year ahead. Let's bring on board G Chandrashekhar, commodity expert. Good afternoon. Welcome to the show. And first, let's start with the roundup of 2020 and then we will move on to our outlook for 2023. And over here, I want to start with gold. Despite the volatility and the kind of uncertainty we've seen, gold has been able to give what, double-digit return? If I'm not wrong, we kickstarted the year with around 48,000 levels, touched a high around 55,000, and then by the end of the year, we have consolidated somewhere around 54,000. Now, despite this kind of high return, it's not exactly high return, looking at the performance since last 5 years at least, we expected gold to perform better, and a typical tool of, which we call it a hedge against inflation, it has not performed exactly the way gold was supposed to or is expected to.
In 2021, gold actually underperformed. The returns were minus 6%. But in 22, that is this year so far, gold has been able to hold on to some gains that it has made recently. Although it was range bound for most of the time, we can certainly expect 23 will be very different, but I'll tell you how different it will be. But we had a lot of supportive factors in 22 itself. Geopolitical developments, the Russia-Ukraine war, a huge amount of liquidity, at least in the first quarter of 22. And of course, the reasonably weak dollar. But all that did not help gold substantially, primarily because of lack of investor interest and lack of physical demand. But now things are changing. In 23, what should we expect? At least I expect for sure that the dollar will weaken, that liquidity will get is tightening, particularly in the US because of rate hike by the Fed. But going ahead, probably in the second half of 23, there will be a pivot. There will be a big pause, a long pause of a rate hike by the Fed, which is a time that the dollar will start losing its luster and gold will actually become the safe haven asset. Today, dollar is still the safe haven asset, but I'm expecting probably towards the end of the second quarter, early third quarter of 23, dollar will start to weaken and gold will get a good fillip. And if you want some kind of what should I say, a price outlook, in my view, in the first half of 23, my call is that gold should trade in the international market between $1,750 and $1,850.
Translated.
And in the second half, there could be a little more gain, possibly between $1,800 and $1,900. I think that's the kind of expectation that one can have.
And Indian pricing would translate to what level, sir?
Yeah, in fact, this prices would obviously translate to higher rupee prices in our country. But my expectation, when we talk of currency, my expectation is that the dollar is likely to weaken gradually in 23, which will actually strengthen, which is expected to strengthen emerging market currencies like the rupee, and therefore the benefit to investors in India of a rise in the international price of gold will be somewhat neutralized by a strengthening rupee. Second, will the government continue to hold on to this high level of import duty on gold? Because there is some representation, some pressure on the government to review the duty structure. Will the government succumb? We still don't know. But basically, international prices are going to go up in 23 of gold, and that will get reflected in our domestic prices, which can potentially go to 60,000 rupees per 10 grams.
That was the figure I was actually waiting, 60,000 potentially. But then let's talk about strengthening dollar, which you said that in 2023, at least 2 quarters, we will see the strength of dollar going up, and that could be a new safe haven. So what are the triggers behind that, and what's the level in dollar that you are talking about?
Well, if we look at this year, the 52-week range has been 94.6. I'm talking about the dollar index, and 114.7. And as we know, this year the dollar reached a 20-year high. It was on parity with the euro. Okay, and that gave enormous strength. And currently, the index, I guess, is at around 104. But my sense, as I said earlier, I expect the dollar to weaken as we go along gradually in 23. One is because of the expected rate pivot by the Fed, and possibly in the, may not be in the third half, but in the fourth half, there could even be a rate cut by the US Federal Reserve, because inflation is still raging in the US, and the Fed chairman has very clearly said that there's no compromise on containing inflation. Therefore, the first half, expect another 2 or 3 hikes in rates, but after that, I think there will be a pivot, and then possibly a rate cut, which should weaken the dollar and basically growth slow down. A recession, we still don't know whether the US recession will happen in the second quarter, third quarter, fourth quarter. But it is not if, but it is only when. And we don't know when it's likely to happen. And the expectation also is unclear whether it will be a severe recession or a mild recession. But recession is certainly around the corner. And that can also weaken the dollar. And the question I ask myself is, how low can the dollar go? Will it reach 100?
That's my question,
and
because
go below 100?
Yeah, because 94.6 and 114.7. Do you think it going below 94 when we talk about softening dollar?
It could potentially go closer to 90. But
Okay.
the question is, what will the central banker in the US Fed, the Federal Reserve, what will they do? What will they come up with something to support the dollar? We don't know. But much of the decision of the central banker in the US is substantially data driven. Therefore, what kind of data they get in terms of inflation and in terms of employment, because currently employment numbers are quite robust. But if those numbers start to weaken over the first or second quarter of next year, I think there'll be a serious rethink about the rate hikes. And then therefore, the fact remains, the position is,
Right.
the expectation is that dollar will weaken gradually over 23.
So what will be the level for rupee when dollar starts weakening?
Yes, when dollar starts to weaken, the rupee, in my view, will probably come closer to 80, maybe 79, or take it as 78, 80 range. But we must also look at our own trade. We have a very large trade deficit. Our over dependence on crude oil, gold import, fertilizer import, edible oil import, all that is certainly likely to continue. And therefore, the trade deficit will not allow the rupee to strengthen dramatically. But from the current levels, I'm sure it's going to pay marginally. I would actually think the average should be 80, or 1 rupee plus minus 80 rupees, 80 to a dollar.
We discussed gold, we discussed dollar, but then let's talk about oil, because so far, as of now, we are not seeing it as a problem for us. But then, if the prices go up, it's going to be a major dampener, in spite of India, holding strongly on the fundamental grounds that we are right now. But oil prices could really ruin our sentiments.
Absolutely. Look at 22. We how in the first half dollar reached a peak of $128 Brent. Brent reached crude. Brent crude reached $128, and towards the end of the year, the sentiment has changed. It's substantially weakened. I think it lost almost 33% in value. But what will happen in 23? Yes, very clearly, IMF, World Bank have said the growth rate in 23 will be substantially lower than the growth of 22. Recession is round the corner. All this should normally, under normal circumstances, signal that the crude oil prices have to fall further. But I don't see that happening for two reasons. One, I would expect once China is able to overcome its current lockdown and other restrictions, this is most unlikely to continue well into 23. Once China starts to improve its economy, India will pick up. Indian demand will continue to be steady. I also foresee the US replenishing its strategic reserves. They had something like 600 million barrels, of which they released into the market about 200 million barrels. They would certainly take it back to anything between 600 and 700 million barrels. And therefore, the demand side to me looks not very strong, but not weak either. The problem could be possibly in Europe, because Europe is already at the threshold of recession. On the supply side, please, we have to be, there are supply risks. Russian production is certainly going to be lower. OPEC will be open to cutting production further. And therefore, I am not bearish on crude oil. I am looking at crude oil prices, for example, in the first half at anything between 75 and 85 dollars a barrel, Brent, in 23. And in the second half, it could even be higher. I'm actually looking at something like 85 to 95 dollars a barrel, second half of 23. Therefore, I think there is need for our policymakers in India to be cautious. Don't for a moment assume that the current prices of mid-70s in terms of the dollar will continue. I think this position can change over the course of even the first quarter of 23.
All right, so that's the outlook for crude oil. But then, if we move on to the other baskets of base metals and looking at China reopening slowly, though we'll have to see how it actually fares when they start opting that strategy of opening up the economy. How are metals looking?
Oh yes, in fact, base metals find is a story. Okay. And therefore, what happens in China is very, very important. If we assume that China is able to overcome its current issues of COVID and that those lockdown restrictions are gradually eased, maybe in the first quarter of 23, then China will be a big demand factor for the base metals. That's number one. And a country like India, we are also going to be consuming a lot of base metals. The whole world is now into energy transition and decarbonization. Therefore, one can expect a steady to positive growth in demand for base metals like copper. And electric vehicles, for example, production and demand for electric vehicles is surely going to grow in 23. And electric vehicles are metals intensive, and therefore demand for copper, demand for aluminium, and other rare metals like lithium, for example, battery metal will all increase. But overall, there are supply risks also in the industrial metals or base metals market. For when we put, if we assume that China will revive its economic activities, then one should actually be ready for an uptick or an upside price risk to base metal prices overall.
All right. In the end, energy. Now, this is the one that's really concerning. So, we are talking about energy outlook now.
No, we are talking about base metals outlook.
Yeah, after that, we move on to energy. Now, where do you see it going up to?
You're talking about crude oil?
Natural gas.
Oh yes, natural gas is of course the storage capacities in Europe are all very nearly full, but Europe is not out of the woods as far as natural gas is concerned. They are going to be facing a crunch situation, and I expect natural gas prices, although they have corrected recently from their highs, yet over the next 2 or 3 months, because of seasonal factors, winter season demand for natural gas will continue to remain high. But in the course of the second quarter and the third quarter of next year, if the Russia-Ukraine war were to settle amicably, we still don't know. I think it's highly speculative. Then possibly there could be a downside risk to natural gas prices.
Also, all right. So now let's talk about the portfolio. Which are the commodities where you would recommend investors to go long and short? Let's start with gold. I know you don't give strategies, but the tentative levels that you've given, according to that, we can really design a strategy whether they should be going long or short. So gold.
Gold, I'm expecting an increase in gold prices.
Okay.
I'm not giving any target, nor am I giving any time horizon. But over 23, gold prices from the current levels are set to rise.
Silver, because will there be a double whammy because of gold and base metal prices? Will it rise more than gold in silver?
No, I don't see base metal prices rising more than gold, because gold is a safe haven asset. It has strong correlation with the dollar. The dollar is going to weaken, as I said earlier, and that is what is going to bring gold back into focus, and therefore gold prices are set to rise. But base metals are, again, there's a strong positive correlation between base metals or industrial metals consumption and economic growth. And we know that 2023 is not going to be a great year for global economic growth. It's going to slow from the numbers recorded for 22 and 21. IMF has said it, World Bank has said it, and therefore the consumption demand for base metal growth rate is in 23. Yet China could be the joker in the pack. If China starts to normalize its life in terms of the lockdown and COVID infections, etc., then I think the possibility of an upside risk or upside opportunity to base metals prices would remain quite good. Yeah, but I'm bullish primarily on copper and to some extent on aluminium.
Silver, I think we missed discussing that. Silver we missed discussing actually.
Please.
Can you hear me? Am I audible?
Yeah, say it again, please.
Yeah, we missed discussing silver.
Yeah, correct. Oh, yes. In fact, I'm bullish on silver, certainly. I would not be surprised if 23 finds silver prices going towards $25. Silver has multiple uses. It's not only a precious metal, it is also an industrial metals. And as we move towards decarbonization and energy transition, demand for silver is going to pick up rapidly. And this is going to boost silver consumption, and therefore will boost even silver prices. As I said, I won't be surprised if the prices reach $25.
All right, so this is going to be the outlook for commodities in 2023. Thank you so much, G Chandrashekhar, and for being on the show and guiding our viewers, helping them formulate a strategy out of the entire run in 2020 and what they can do to make profits in 2023 in commodities. Thank you so much for being on the show today. And with that, we'll slip into a short break, but then more on your financial planning after this break.